Welcome to our video on banking. In this video, we will be discussing the various ways in which banks make money, as well as tips on how to protect yourself from hidden fees and charges. We will also be discussing how banks keep track of your financial activities and what you can do to stay out of trouble. So, sit back, relax, and let's dive into the world of banking. Almost a century ago, Henry Ford suggested that it was a good thing that most Americans did not know how the banking system worked. He believed that if they did, there would be a revolution before the next morning. Despite the passage of time, this statement is still true today. However, it is important to note that the idea of banking is not necessarily a bad thing. Banks do provide us with very useful services and have become an essential part of our lives. Everyone wants to keep their money where it is safe and secure. Without banks, we would have to resort to keeping cash under our mattresses or burying it in our yards. The truth is that banks are cashing out big time, often at the expense of the unsuspecting public. Because financial institutions operate in complex and rigorous structures, some unusual practices are concealed from the public. This can include taking advantage of customers through hidden fees or deceptive loans. It doesn't matter which side of the coin you choose, we are all affected by the actions of banks. Whether you're taking a loan, spending your money, or saving it, there are numerous ways that banks make money off of you. Despite these issues, it is important to remember that banks do provide valuable services and play a crucial role in our economy. However, it is also important to be aware of the ways in which they can take advantage of customers and to take steps to protect yourself financially. The sad part is that many people are unaware that they are being taken advantage of by banks. Banks have multiple income sources, which could be one of the reasons why bank stocks have become a popular investment choice. However, there are some truths about money that banks do not want you to know. The first truth is that you're losing money every year when you keep it in the bank. This is not about the fees that you pay on your spending or someone stealing your money. It has to do with inflation, which is the increase in the prices of goods and services over time. This means that an item you could buy with a $50 note today would cost slightly more in about a year, and much more in 10 years. Many people think that the money they have in their bank account is safe, and that the value remains constant over the years, or even grows bigger because of interest. However, this is not entirely true with most bank accounts. On average, inflation in the US sits at 2%. If your money in the bank yields 0.05%, it means that you're losing up to 1.95% on the value of your money every year. This is not including any money that you may have invested in other financial platforms to yield returns. Another truth is that banks are not always transparent about the ways they make money. Banks may charge hidden fees, or take advantage of customers through deceptive loans. It is important to be aware of these practices and to take steps to protect yourself financially. In conclusion, while banks do provide valuable services and play a crucial role in our economy, it is important to be aware of the ways in which they can take advantage of customers and the impact of inflation on your savings. It's important to be informed about the different ways banks make money and take steps to protect yourself financially. Rather, I'm talking about the money you have sitting idle in your savings or checking account. Now, I hope you're getting some value from this video so far. If you are, I'd like you to do something right now. Simply pause this video, go ahead and hit the like button, and then subscribe to this channel. That way, you'll be updated anytime we upload inspirational videos such as this one. Done? Great, let's continue. The second truth is that banks earn money from your card transactions. Every time you swipe your credit card or debit card and make purchases, banks make money through processing fees. You may not know this because you were only debited for your actual purchase, but the merchant pays the fees. The merchant could also have included these fees in the sales price because he wouldn't want his profit to come up short. Let's look at it this way. Let's pretend you made a purchase of an item at the cost of $500 and you paid with your card. If the merchant is charged 3% on every payment made with a payment card, that means a whopping $15 goes to the bank. The bank gets this money just for providing the machines and the convenience for payment. Do you think the merchant will be glad to have the $15 taken off his profit? You're the one paying this fee and I'll show you how. Let's say the item was supposed to sell at $480. The business owner must have raised the price to $500 to cover the processing fee. This means that the $15 that the bank earns comes from the customer, not the merchant. Banks earn money from your card transactions, and it is important to be aware of this when making purchases. Almost a century ago, Henry Ford suggested that it was a good thing that most Americans did not know how the banking system worked, as if they did, there would be a revolution before the next morning. Although several decades have passed since this statement was made, it seems to be as true today as it was in the 1930s. The sad part is that many people do not realize they are being taken advantage of by the banks. Banks earn money from multiple sources, such as processing fees for card transactions and interest rates on credit cards. For example, every time you swipe your credit card or debit card to make a purchase, the bank makes money through processing fees. Additionally, the average interest rate on a credit card is 17%, but banks can raise it at any time without notice. It's important to be aware of these practices so that you can make informed financial decisions. While the credit card is a useful service and has become a part of our daily lives, it's important to be mindful of the potential for accumulating debt. Care should be taken to pay off debts and avoid falling into a difficult financial situation. Every single month, your money in the bank is not physical. You could have tons of money in the bank, but these are merely figures and electronic records. This is because the banks use your money to do business. They give out this money in the form of business loans, car loans, or mortgages to others. Your money is with the bank, but in reality, your money is in other places making extra money for the bank. This reality came to play in 2008 during the Depression. Out of panic, people went to the banks demanding to withdraw their money, but the banks had no money to pay everyone. The banks could have that amount in liquidity, but in the event of a crisis, when everyone makes a run for their money, the physical cash will not be there. This comes as a result of a policy that is called fractional reserve banking. This policy allows your bank to lend out your money to those who need them in the form of loans and mortgages. Does it mean the banks are not safe to keep your money? Not at all. Your money is protected by insurance, and also the government is there ready to step in should anything go wrong. So if you have money in the bank, feel free to go to sleep with your two eyes closed. Only know this, having money in the bank is not like putting money in a box where you can access it at any moment. Your money is busy making money this time, not for you, but for your bank as an individual. Banks may seem like a safe and secure place to keep your money, but there are several truths about money that banks don't want you to know. One is that you're losing money every year when you keep your money in the bank. This is due to inflation, which is the increase in the prices of goods and services over time. This means that the value of your money decreases over time, even if you're earning interest. Another truth about banks is that they make money through processing fees when you use your credit or debit card to make purchases. This means that merchants end up paying these fees, which can result in them raising prices to cover the cost. Additionally, banks also make money by charging high interest rates on credit cards, which can accumulate and become a financial burden if not paid off on time. Lastly, it's important to be aware that bankers are not always your friends. They may seem friendly and genuine, but they are often following a script to build trust and convince customers to take out loans they don't need. They may also be under pressure to meet sales targets and can lose their job if they don't. So, be on guard when interacting with bankers and always consider your own financial needs before making any decisions. Banks often use a variety of tactics to make money off of their customers. One way is through offering loans or credit cards that may not be necessary or beneficial for the customer. Additionally, banks often make money through foreign transaction fees and hidden charges that may not be disclosed to the customer. It is important for individuals to be aware of these practices and to regularly check their bank accounts for any unexpected charges. They should also be cautious when signing up for loans or credit cards, and be sure to fully understand the terms and conditions before proceeding. It's important to be aware of the policies and practices of banks, as they can have a significant impact on your finances. One important thing to know is that if you notice any unauthorized charges on your account, you can report them to your bank within a 90-day window. By law, the bank must credit the money back to your account within 48 hours. However, banks may try to delay or avoid this process, so it's important to be persistent and aware of your legal rights. Another thing to be aware of is that banks are required by law to report any suspicious financial activity to the IRS. This includes large transactions, such as withdrawals of more than $10,000. If your account is audited, the IRS will want to know if you paid taxes on the funds and if the transactions were legally carried out. It's important to be aware that your financial activities are being monitored and to make sure that you are staying compliant with all laws and regulations. In conclusion, being aware of the policies and practices of banks can help you stay in control of your finances and avoid any legal or financial trouble. Be sure to regularly check your account for unauthorized charges, and be aware that your financial activities are being monitored by the government. It's also a good idea to educate yourself on the ways banks make money and to be vigilant when signing up for loans or credit cards. If you enjoyed this video, please give it a thumbs up and subscribe for more content like this. Thanks for watching, and have a great day.